Welcome back, investors. Today we're diving into the revelation of an AI stock sensation, Supermicro Computer, with the ticker symbol SMCI. Supermicro transformed from a modest computer server hardware firm with meager profit margins into a comprehensive IT juggernaut, catering to cutting-edge industries such as AI, Metaverse, Omniverse, 5G, and data centers, partnering with major players like NVIDIA, reshaping the tech landscape. Buckle up as we embark on a deep analysis of this remarkable transformation, culminating in a significant pricing event, propelling the stock from $50 a share to over $1,200 in under 2 years. We'll meticulously dissect all pertinent factors in real time, providing a blueprint for uncovering the next hidden gem, including an uncommon investor relations tactic that I've never seen before. After listening closely to this video, you might find yourself getting excited about the potential of knowing what to look for in an undiscovered stock. Nothing contained within this video should be interpreted as a recommendation to purchase, sell, or hold any security at any time. Always consult with an investment advisor familiar with your specific situation before you make any investment. We do not provide investment advice. This video is for entertainment purposes only. Hello, I'm Brian Cota, founder of 4387 Capital. Thank you for joining us today as we delve into one of the hottest stocks of recent years, Supermicro Computer. Before its reinvention, Supermicro was a mundane company characterized by poor margins and a competitive landscape, making it easy for investors to overlook the stock. Since its IPO in 2007, the stock languished for years, reflecting the lackluster economics of its old-school business model. But in 2022, a transformation began to unfold. Collaborating with tech giants like NVIDIA, Supermicro positioned itself as a leader in server solutions, a vital component in the digital age. An investor didn't need to be a tech expert to recognize the shifting dynamics. By following price action and understanding financial inflection points, astute investors would have discerned that the company's trajectory was changing. Despite the volatility stemming from the 2022 bear market, there were clear indications that investors were accumulating shares. It was only a matter of time before the stock would break out during the next bull market. So let's not delay any further and explore the journey of Supermicro Computer. Based in San Jose, California, Supermicro provides high-performance storage and server solutions for AI, cloud computing, and more. With the advent of data centers, software security, and AI language models, demand for server solution remains high across all industries. But before all the excitement, Supermicro was a boring business with tiny margins. For example, in Q3 of 2021, Supermicro generated $800 million in revenues and made only $20 million in net income. It begs the question, why even bother? And investors didn't bother as the stock didn't do much for years. If anyone knows me, I'm not a fan of low operating leveraged businesses, meaning businesses with no scale. I find that these sorts of businesses provide little upside to investors, and there's really no reason to own it. It's safe to say that most public companies fall into this category, a topic for another video. As we alluded to earlier, business was changing. The company made a strategic decision to be more valuable and create IT solutions that were heavily desired in the marketplace. Well, in May of 2022, Supermicro announced a killer earnings report, demonstrating its transformation was working. The CEO was very bullish about the future of his business. He was saying things like strong confidence and robust earnings growth. This sort of verbiage is a big clue. Usually CEOs are more tranquil on earnings announcements. During the earnings call, the CEO even let it slip, saying they needed to double GPU production to accommodate their NVIDIA partnership. It's this sort of language that captures investors' attention. After announcing, the stock responded with a 22% increase that week on tremendous volume. Unfortunately, we were in the throes of a bear market and the breakout failed. The stock retraced all those gains and then some. The stock continued this volatile trading for the next 12 months, making very little progress. In the meantime, the investor relations team resorted to an uncommon tactic by pre-announcing their robust quarterly earnings every quarter. Public companies usually reserve pre-announcing for bad news or year-end updates, but no question, it was a bullish sign of more good things to come. Now, let's look at the financial metrics that created an inflection point for investors. Keep in mind this remarkable trajectory occurred in a little over a year. First, look at how quarterly sales began to ramp up, increasing from around $800 million to $1.8 billion a quarter. This is impressive. But what is more impressive is margins more than doubled as well, reflecting its ability to secure premium pricing in the marketplace. This resulted in operating leverage, allowing earnings to scale above historical metrics, providing a clear repricing event for investors. Remember, this earnings ramp was happening before the stock broke out. Now for the pivotal point, the point where Supermicro begins its parabolic ascent. In May of 2023, Supermicro announced Q3 earnings and the stock reacted with a 30% increase that day alone. This was the tipping point, and the stock went on a parabolic run from $134 a share to $1,200 in less than a year. At this point, the stock is discovered and well extended from any buy point. As we conclude our uncovering of Supermicro Computer, you might be remembering the valuable lessons learned from this transformational tale, to the point where you might be getting excited about the potential of finding a great investment. For me, it is how the status quo can change and how a dedicated management team can reinvigorate its product offering and change the trajectory of its earnings and ultimately its stock price. In the ever-changing landscape of investing, opportunities abound for those willing to dig deep and truly understand its business dynamics. If you're a trader looking for the next opportunity or a long-term investor, I hope you were able to take away a few nuggets from this video. Many investors often believe they should avoid businesses they don't fully comprehend, or they feel they must possess technological expertise. However, a straightforward remedy exists. Instead of fixating on intricate details, it's advisable to grasp the fundamentals, particularly emphasizing a company's sales and earnings growth. Remember, it's not important to remember everything I said in this video. Just listening and taking away key points is enough. What other lessons can we learn from Supermicro's transformation? Share your thoughts and insights in the comments below. Provided in the link below, you can sign up for more compelling thoughts on the market. Like, share, and subscribe to our channel for more investor content and market insights. Thank you for joining us on this illuminating journey of Supermicro Computer. This is Brian Cota, signing off.